Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I want to talk a little bit about some of the things you need to be thinking about at year end with regards to the investment portfolios. But before we do that, we just thought we'd have a look at year-to-date indice returns. You know, when we look in the United States, we see the Dow is up 6%. We see the S&P 500 is up about 11%. The NASDAQ, which is the technology index down there, is up about 14% so far this year. And if we turn to Europe, we see London's up 5%. We see France is up 13%. We see Germany is up a whopping 26%, Chris. And when we turn to the Asian markets, we see Tokyo up 11% and Hong Kong up 18%. And it's interesting when you contrast that to where do we see the TSX? Well, that's up 2% so far this year, Chris. So our message here is a couple things. One is global diversification is critically important in long-term portfolios. And I recall about a year ago, Chris, when we talked about this, you know, you couldn't get anybody interested in anything but Canadian investments. They all wanted to come home and hunker down. And it's just an example of what markets can do. Now, let's turn to some of the year-end stuff, and we'll start with tax loss selling.
Sure. Well, if you work with an advisor, you want to have a look at your portfolio. If you've taken some gains during the year, have a look at your portfolio. You may be in a loss position in certain securities. Good time to sell those securities out and look to offset those losses against some of the gains that you've taken earlier in the year to neutralize the tax position in your portfolio. If you want to buy those positions back, make sure that you have to wait at least 31 days before you repurchase those securities if you want to continue to hold them down the road.
Yeah. Chris, real quick here on buying mutual funds in non-registered accounts at year end. Be careful because December is when they go on the record date for the entire year's tax implications. So if you buy it now and there's tax implications from activity prior in the year, you're going to be faced with a slip from them come the new year.
That's right. Registered educational savings plan. If your child turns 17 this year, this is the last year that they can contribute and still receive the grant money. So make sure you have a look at that. There's a couple of other qualifying criteria, so you want to work with your advisor on that aspect of things.
And lastly, TFSAs, the tax-free savings accounts, well, that number goes up for 2013 to a $5,500 contribution. But Chris, if you're going to make a withdrawal from that account and you're not sure when to do it in 2012 as opposed to early in 2013 because you have to sit out the whole following year to put that money back.
That's right. I want to thank you again for your questions and comments. Please keep them coming and contact Grant and I at twoinvestmentguys.com.
Join us in the new year. Chris and I are going to turn back to the markets and talk about some of the things that we see going on there. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys wishing you and your family all the best for the holiday season.